talk about the contours of the deal first. It's basically we got into IT staffing about 3 years ago after our IPO, and since then, including eCentric, we've done about 4 acquisitions. The first 3 acquisitions were around, the staffing companies that were focused on IT service companies, and then product companies, and then captives. So we today have within the IT staffing business, a division that caters to IT service companies, and then to product companies and to captives. We would like to, so a couple of months back when we looked at it, we said let's probably expand our footprint into the product and captives, and that's where the eCentric's business actually fell perfectly into. And that's what eCentric's IT staffing operations has given us. It's given us an entry into the product and captive markets, a better kind of foothold there, on which we would like to grow this the IT staffing business currently. The contours of the deal, so if you want to look at it, it's kind of given us about 880 associates, and for last year, they did a revenue of about 45 crores. It's a very young company, just about 5 years old, so they were getting up in the profitability kind of graph, and so from a timing perspective, kind of just turned out perfect for us. Typically, what we do believe is that these kind of businesses will give us a margin of anywhere between about 8 to 10% in the initial years, which we will expand as we go forward. And so that probably gives you an indication of the kind of price that we have paid for this deal, because we haven't really put out a number yet in the market, but this is a deal where for the year ending March 2020, we do expect growth, and we do expect anywhere between about 8 to 10% margins coming from the eCentric's share of the business for us.
All right, point taken. So about an 8 to 10% margin improvement is what you are factoring into the kind of cost price here. Would you be able to share, an estimate of the cost of the acquisition, and also then how EPS accretive is this acquisition expected to be?
It is. Like we said in the press release, this is going to be EPS accretive from day one, because this is a profitable business for us, and this is going to contribute to the EPS, to the overall EPS. Like I said, for the year ending March 19, they did a revenue of about 19 crores. 45 crores, and you could probably factor for at least a minimum of about 25 to 30% growth on that, and you could probably take 8 to 10% margin on that overall turnover to be the total profits that would be generated by this particular deal. So the deal itself for us has been a very sweet one, and we do expect that we should be able to recover our investments in about 3 to 4 years from now.
All right, 3 to 4 years is the kind of timeline in order to recover the investment. Definitely looking at a strong contribution coming in, especially with the profitability and margin figure. Give us a sense, and you've already spoken a bit about the kind of, the contours of the deal here. What is the kind of synergy that this acquisition brings along? Because you also bought Bangalore-based Keystone Business Solutions recently. That was in order to strengthen your IT staffing vertical. What is then the future of your IT staffing vertical going forward from here?
If one were to look at the IT staffing business itself, the business consists of very few large players and a bunch of fragmented small IT companies catering to the needs of these IT service companies actually. So there is ample scope for consolidation, and which is what we are trying to build the business on. While we have grown the business organically, the 3 acquisitions that we did about 2.5 years ago, which is ASAP, Niche Pro, and Keystone, all the 3 put together gave us about 900 associates in the aggregate of all the 3, and the 3 has today grown to almost close to about 1,900 associates, which means that we have almost doubled the headcount from the time it came into our fold. So Keystone was a company that catered to the captive to the captive businesses, while if you take eCentric caters to the product companies and captive companies. They are Hyderabad headquartered, where our presence was not extremely strong. While the business opportunities are large, our presence in Hyderabad was not very strong, which is where the eCentric business complements us very well. We don't have very many customer overlaps, at least the top, at least the top customers. There's no customer overlap, which means that all of it is going to be very kind of this growth focused for us. And I do think that between the ones that we already have and eCentric, we are actually well poised to take advantage of the ID staffing market itself.
In fact, there's a fair bit of seasonality that also plays into this business. Generally, if I'm not mistaken, the first quarter and the fourth quarter, for that matter, they seasonally clock the highest hiring. How have trends shaped up this time around?
These trends have remained the same. Q3 is typically a bit of a lean quarter, with most of these product and captive companies and most IT companies going slow in Q3 in view of the holiday season between December and January. So those patterns haven't changed at all. They continue to play out the same way as they did earlier, which means that Q1 and Q4 you will see these kind of seasonalities coming into play even now.
All right, just a final question then. How is integration coming along? If we talk about, your various other inorganic growth opportunities, recent acquisition, if we talk about School Guru, Fresher World, and of course the Keystone business?
Right. All of them are, I think the integration, we spend a fair amount of time on the integration, on thinking about the integration, planning the integration, and executing on it, because the key to an acquisition is not the acquisition per se, it's really the integration. And that's where we as a management team spend a considerable amount of our time in trying to see how best we can integrate these companies. The best part of all these acquisitions is that the team that's been running these businesses have actually come on board. Just that the founders have chosen to move on, but the team that's actually been running these businesses have come on board. They continue to be they continue to be working with us even now, and that's where I think most of our acquisitions have actually done well because of the focus that we have on the integration part.
All right, thanks very much, Ravi. We leave it at that. Pleasure speaking to you, and of course, a new acquisition essentially by TeamLease Services.
Thank you.
That's the view coming in from the management, expecting it to be